Congratulations on completing day 1 of Mastering QuickBooks. Real-world training has taught over 1 million students how to use QuickBooks. During this time, we've identified a few topics that apply to some, but not all students. So, we've added an appendix for these miscellaneous topics. The first subject is sales taxes. Next, you set up, collect, and pay sales taxes. You also run reports that help you prepare sales tax returns, and you adjust sales taxes for late payment fees or early payment discounts. You also learn how to manage inventory. You create purchase orders, buy inventory, and make inventory adjustments. Then, you run powerful reports that help you manage inventory. In this section, you collect and pay sales taxes. Real-world training teaches sales taxes all over the country, and we've discovered one consistent thing about sales taxes across different states. There is nothing consistent about sales taxes. What often makes sales taxes difficult are the laws in your state. Some states have one rate. Other states have different rates for counties or cities. Another factor that complicates this even further is who you pay sales taxes to. In some states, you pay sales taxes to one entity, like the state comptroller. In other states, you pay sales taxes to different entities, some to the state, some to the county, and maybe some to the city. Because of these complexities, sales taxes can be very challenging. Fortunately, QuickBooks has an excellent system for tracking, reporting, and paying sales taxes. In this section, you first set up sales taxes. Then, you see how sales taxes are calculated and displayed on invoices. What do you do when it's time to pay sales taxes? Next, you run 2 reports that help you when you pay sales taxes and complete tax forms. What if you need to adjust sales taxes for late fees or early payment discounts? You do this next. Sales tax payments are created differently from other checks in QuickBooks, so you learn the special method for paying sales taxes. Remember, no states have exactly the same tax rules. In this section, we use specific states as examples only. Consult your accountant for specific rules in your state. Setting up sales taxes involves 5 steps. First, set sales tax preferences. This involves turning sales taxes on or off, specifying when sales taxes are due, and other important choices. Second, set up sales tax items and sales tax groups. This is when you create the individual tax rates you charge your customers. Depending upon your state, that involves either sales tax items or sales tax groups. A sales tax item calculates one rate that you pay to a single tax agency. Sales tax groups let you track complex sales tax situations where you collect state, county, and local taxes at once, but report or pay them separately. Third, set up sales tax codes. Use sales tax codes to identify why a sale is taxable or non-taxable. Some states require that you report this information. Fourth, assign a sales tax code to sales items. Use this feature to tell QuickBooks which sales items are taxable. For example, in some states, labor is taxable, while in others, it's not. Fifth, assign a sales tax code and sales tax item to customers. This tells QuickBooks which customers are taxable. For instance, most charities don't pay sales tax. You can specify any customers that are charities as non-taxable. Follow these 5 steps to set up sales tax correctly.
Step number 1 to set up sales taxes is changing preferences. Click the Manage Sales Tax icon on the home page. You perform most sales tax activities from this window. Click the Sales Tax Preferences button. The preferences appear in this window. QuickBooks asks whether your company charges sales taxes. Bildum does charge sales taxes. Click this button to add sales tax rates. You see this later. The most common sales tax rate for this company is the Dallas rate. You work with sales tax codes in this section of the window. You also learn about this later. When does your company owe sales tax? There are 2 choices: as of invoice date or upon receipt of payment, when you get the money. Most companies owe sales taxes as of the invoice date. Below when do you pay sales tax, specify how often you pay the sales taxes you have collected. Build them, pay sales tax monthly. When printing sales tax reports, QuickBooks uses the prior month as the base for the reports. The next step is to set up sales tax items and sales tax groups. Step 2. Set up sales tax items and sales tax groups. Build them as a new customer in Rhode Island and 2 new customers in San Antonio. Let's set up the tax items. Click the Add Sales Tax Item button. The item type is a sales tax item. A sales tax item is a specific tax rate you collect and pay to a single tax agency. In Rhode Island, there is just a single statewide rate, so no matter where our customer is in that state, we're going to use the same sales tax. The new tax is for Rhode Island. Let's enter a description. Rhode Island sales tax. The tax rate is 7%. You pay this tax to the state of Rhode Island. Click the Tax Agency drop-down arrow and select State of Rhode Island. Click OK to save the item. Now let's add a sales tax group. Sales tax groups are used when you need to charge multiple rates at the same time, which is often called a combined rate. Click the Add Sales Tax Item button. The type is Sales Tax Group. Sales tax groups let you collect multiple sales taxes together on a single transaction, while still keeping track of what amounts have been collected for different rates, such as state, city, and any special local rates. This tax group is for San Antonio. Let's enter San Antonio combined rate as the description. In the bottom section of the window, select the individual sales tax items that make up the group. The first tax item in the group is Texas State. Click the drop-down arrow and select Texas State from the list. The state rate is 6.25% and payable to the state of Texas. Let's add the second tax item. Click the drop-down arrow and select San Antonio City. For the third item, click the drop-down arrow and select San Antonio Special Rate. This is a special rate San Antonio requires us to charge our customers in order to pay for special city projects. Here's the key point about a sales tax group. Customers only see one tax rate of 8.25% on their invoices. But behind the scenes, QuickBooks tracks each tax separately and can even create individual payments to each tax agency when you pay sales tax. Click OK to save this sales tax group. Then click OK to save the preferences. Step 3 is setting up tax codes. Remember, these are only examples. At the time of this recording, these examples are accurate, but they may change over time. Step number 3. Set up sales tax codes. Click the Manage Sales Tax icon on the home page. Click Open Sales Tax Code List to open the list. Sales tax codes can be confusing if your state does not require that you report why a sale is non-taxable. If you live in one of those states, you just need one taxable tax code and one non-taxable tax code. QuickBooks adds these tax codes when you turn on sales taxes. What if you live in a state that requires you to report why certain sales are non-taxable? Use sales tax codes to do this. For instance, if you sell products or services to an exempt organization, like a charity, use this item. Let's double-click to open the item. In this window, enter a description for the tax code. Then identify if the tax code is taxable or non-taxable. Let's close the window. Set up these codes based on what your state requires. For example, some states require that you show sales to out-of-state customers separately, and some states require that you show sales to resellers separately. Now you need to specify tax codes for your items. Step 4 is to assign sales tax codes to items. Click the Items and Services icon. You might sell both taxable and non-taxable items. For instance, labor is not taxable in most states. Double-click on Knob Installed to see its details. Use the tax code field to assign a tax status to an item. For Bildum, labor is not taxable, no matter who the customer is. Therefore, assign a non-taxable tax code to the service item. Close this window and let's look at an inventory item, the doorknob. Double-click on the item. When you assign a tax code, ask the question, is the item ever taxable? For doorknobs, the answer is yes. If so, mark it with the tax code Tax. This doesn't mean you always charge sales tax for the doorknob. The customer must also be taxable. Now that you've assigned tax codes to items, assign tax codes to customers. In Step 5, you assign sales tax codes and sales tax items to customers. First, click Customers to open the Customer Job List. Scroll down to look at a taxable customer, San Antonio Cleaners. Double-click to edit the customer. Then click the Sales Tax Settings tab. Enter sales tax information for your customer here. Click the Tax Code drop-down arrow and select Tax. San Antonio Cleaners is located in San Antonio, Texas. So click the Tax Item drop-down arrow and select San Antonio. Click OK to save the sales tax information. Scroll up the list to look at a non-taxable customer, Alamo Foundation. Double-click to edit the customer. Then click the Sales Tax Settings tab. The Alamo Foundation is a charity and exempt from sales taxes. Click the Tax Code drop-down arrow and select Exempt. The Alamo Foundation is also located in San Antonio, Texas. Click the Tax Item drop-down arrow and select San Antonio. Here's a question. Why assign a tax rate to the customer if the customer is exempt? This is for reporting purposes. This way, your reports show sales to the Alamo Foundation as exempt sales in San Antonio. You see this later. Remember, sales tax rules vary from state to state. Real-world training recommends that you consult your accountant when setting up sales taxes. You have now set up sales taxes. Let's review how sales taxes work on individual invoices. Click the Create Invoices icon on the home page. For the customer, click the drop-down arrow and select San Antonio Cleaners. The date of the invoice is March 31st. For the first line item, click the Item drop-down arrow and select Doorknob. The quantity is 5. You already entered doorknob with the tax code Tax. Also, you entered the customer with the tax code Tax. Because both the item and customer are taxable, QuickBooks charges sales taxes on the doorknob. What tax rate does it use? The tax rate for San Antonio. Therefore, QuickBooks calculates sales tax on the line item for you. Let's add a second line item. Click the Item drop-down arrow and select Knob Install. With a quantity of 5. You already entered the tax code Non because the labor is not taxable. Therefore, QuickBooks did not add any sales taxes for the labor. This really demonstrates the relationship between the item's tax code and the customer's tax code. Each must be taxable to charge sales taxes on an individual line item. Click Save and New to record the invoice. Let's enter a second invoice for a non-taxable customer. Click the Customer Job drop-down arrow and select Alamo Foundation. The date of the invoice is March 31st. Let's enter the same line items for this invoice. Click the Item drop-down arrow and select Doorknob with a quantity of 5. For the second line item, click the Item drop-down arrow and select Knob Install with a quantity of 5. The doorknob shows a tax code of Exempt. On the last invoice, the tax code for the same item was Tax. Why did QuickBooks change it to the Exempt tax code? If the customer has a non-taxable tax code, It overrides each item's tax code. This makes sense because an exempt customer should not pay sales taxes. Click Save and Close to record the invoice. Now you understand how sales taxes work. Let's run 2 reports that will help you pay sales tax and prepare sales tax returns. Click the Manage Sales Tax icon on the home page. Click Sales Tax Revenue Summary. The Sales Tax Revenue Summary shows sales information by tax item. This report is only necessary in those states where you must show why certain sales are non-taxable. The first column shows taxable sales for each tax jurisdiction. The following columns show the types of non-taxable sales by tax code. These columns identify why a sale is non-taxable. Let's review the information for San Antonio based on the invoices entered in the last topic. The first sale was to a taxable customer, San Antonio Cleaners. This amount is the taxable portion of that invoice. The second invoice was to an exempt customer, the Alamo Foundation. This is the total amount of that sale. This amount is the non-taxable portion of the sale to San Antonio Cleaners, the labor for installing the doorknobs. Remember, use this information in states that require you to report the reason sales are non-taxable. Now let's run a report that specifies how much you owe for sales taxes. Click Sales Tax Liability. The Sales Tax Liability report shows how much you owe for sales taxes for this time period. The report shows each tax item grouped by tax agency. Depending on your state, you might have just one sales tax item on this report. Here's the sales tax information for the new tax item, San Antonio. The last column shows the amount due at the end of the month. Bildum now owes this much in tax. Use the Sales Tax Summary Review to show why certain sales are non-taxable. QuickBooks has a special feature for adjusting sales taxes. Click Adjust Sales Tax Due. Use this window to add or subtract from the amount of sales taxes due. For instance, some states offer early payment discounts. Other states charge a penalty for any sales taxes paid late. In this case, let's pay a late fee because our payment is 3 days late. The date of the adjustment is March 31st. The entry number is 1. Click the Sales Tax Vendor drop-down arrow and select the state of Texas. Click the Adjustment Account drop-down arrow and select Late Payment Fee. When entering an early payment discount, use an Other Income account. Below Adjustment, specify whether you want to increase sales tax or reduce sales tax. Choose the first option to increase the sales taxes due. The amount of the late fee is $25. Click OK to record the adjustment. Now all you have left to do is create the check to pay sales taxes. Now it's time to make the monthly sales tax payment. Click the Pay Sales Tax button. Each specific tax item appears in this column, and the amount due appears in this column. QuickBooks shows the late payment fee as a separate line item in the window. Click the Pay All Tax button to pay all the sales taxes. QuickBooks marks taxes for payment with a check mark. Select the checkbox next to Be Printed to print this check later. Click OK. That's it. You've just paid sales taxes. Remember, tracking and paying sales tax can be complicated and confusing. Real-world training recommends that you consult your accountant or the appropriate tax agency for the rules in your state.